You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got a trio of what I think are really interesting interviews for you, all from companies that presented at the recent Venture Tech conference down in Frisco, Texas, outside of Dallas. We'll be talking to Joe Gracia of Nickels, the company that actually took away the hardware for the best solution, according to the audience vote. And then two more from the AI territory, also standouts at the event, Blesson Abraham from Aviary AI and Daniel Jamil from Ceres AI. I'll first remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And I will also remind you that the last of our bi-weekly, more or less, CU Town Halls will be having the last edition of this calendar year coming up in about a week, if you're listening to this when we first put it out on the web. Wednesday, December 11th is the date of our final town hall of the year, and we'll be covering what we think to be some of the bigger stories of the year, as well as looking at the outcome of the recent election and how that will be affecting the payments and the overall fintech and credit union environment. Obviously, a lot from the regulatory standpoint, but it probably has some other kind of overarching and cascading factors as well. So we'll be hitting those topics if you'd like to join us, and we hope you do. That is at 3 p.m. Eastern, noon Pacific, live and lively interactive conversation. cutownhall.com. You can find old episodes there. Runs about an hour, and we hope that you do bring ideas because we look for these to be as interactive as possible. No cost to join. You do need to register in advance, though, so cutownhall.com for you to do that. I'll also mention, speaking of big stories of the year, we'll be getting together again, just as we did last week, for our Thanksgiving episode. And if you haven't checked that out, please do. We talked about all the things we're grateful for in the fintech and credit union space. But we're also going to be convening again to do our usual year-end episode about the biggest stories in the credit union and fintech world, along with John Janklius and John Best and myself. And we'd love to hear your thoughts as well. We'll be recording that pretty soon in advance, obviously, of an airing. I think, well, it'll be out before Christmas Eve. I'll promise you that. I'm not exactly sure which day we're going to drop it. But any thoughts you have of what you thought were the biggest stories of the year, we'd love to hear from you. You can always drop us a note. You can find me on LinkedIn, Glenn Sarvati, or you can drop me a note also at glenn.sarvati@154advisors.com, 154 Advisors being my firm. Well, as I said, that episode will be out there pretty soon. Before that, however, wrapping up again, and I've already done one episode, we will include a link to with a couple of other winners from the Venture Tech conference. A lot of really great stuff. I've raved about it already, so I probably shouldn't go on too much more. But these three I thought really stood out. And obviously, the first one very much stood out because it won the overall award for the top prize. Joe Gracia, who unveiled his new product, CardFit, part of the Nickels family, and wound up our conversation, as you hear, kind of descended into a debate about vegetables and nutritional labels on cereal boxes. Have a listen. I'm here with Joe Gracia, the founder and CEO of Nickels, who was the winner of this year's Venture Tech main competition. And it was a really, really steep competition, I have to say. And Joe, as I think we talked about on site, I definitely thought you were a standout and you had my vote. So congratulations.
Thank you very much. It really was an honor to win. I was not expecting it.
Like I said, it was a tough group. It was definitely, there was an awful lot of really great solutions out there. Let's just start. I mean, kind of the, I guess, elevator pitch, whatever you want to say. I thought that the way it lays out nicely is, NerdWallet for credit unions is the way that you kind of started your pitch. Can you just say a bit about it? Oh, and first off, this is a new launch. Nickels has been around for a few years. I think we talked probably at Venture Tech maybe 2 years ago, if I'm not mistaken.
That's exactly right. We shared a cab to the airport together.
That's right. I forgot about that. But this is a new product, CardFit, as you're calling it. Can you say a bit about the model here?
Yes. So Nickels is a QSO. We only work with credit unions. As you mentioned, we've been around for a few years, helping credit unions in different aspects of supporting their members around credit cards. And what we saw is that when it comes to credit card selection, i.e., what is the right credit card for a person, that let me back up a little bit. Half of the country sometimes carries a balance on their credit cards. This applies to 69% of prime credit score cardholders. And what I mean by that is they don't pay off their statement balance in full in any given month. And for those revolvers, as they're called, on average, they earn about $42 in rewards on their credit cards while getting charged $456 in interest and fees. They're flat out just on the wrong card. 25% of credit card applications come through comparison sites like NerdWallet, Bankrate, Wallet Hub, etc. And those sites, in our estimation, are really catering to the big banks and don't provide good use for people that sometimes carry a balance to figure out the best cards for them. Federally regulated credit unions are capped at 18% APR. They across the board have lower rate credit cards that'll better serve this half of the population. And so what we've developed is NerdWallet for credit union credit cards, a comparison site that shows users a dollar for dollar comparison based on how they typically behave. And what we're seeing is it's actually a great way for credit unions to use their credit cards to acquire new members, which is a top priority at most credit unions.
And I think what you pointed out too is when you go to a NerdWallet or someplace like that, it's the the quote unquote best offer. And like you say, if you pay off your card every month, then rewards are a great thing. And the thing that seems to get you to the top of that list is this amazing upfront signing bonus. You get some amazing amount of 50,000 free airline miles or whatever it is. That's what moves the meter. I think you said that the credit union cards just, for whatever reason, it's that lower interest rate isn't in the heuristics or the algorithm that gets to the top of the list. So they're not even getting the visibility.
Yeah, what we've heard from credit unions is that a lot of these big comparison sites are expecting you to have a national, reach and a national play. And so if they come to them and say, oh, we just want to be working in Ohio or Oklahoma or this region, then that doesn't work with their business model. And what we're seeing is, and we've talked about analogies and we can dig into this, but I mean, as I used in my pitch at Venture Tech, 13-year-old me signed up for those 12 CDs for a penny, thinking it was a great offer, not realizing what I was actually getting into. And I look at these credit card offers that we get in the mail, multiple times a week as today's version of that 12 CDs for a penny. They dangle 75,000 miles in front of you to get you hooked, knowing that the human mind didn't evolve to easily understand APRs or the impact of APRs. Oftentimes, you don't know what your APR is going to be until you get the card. And so in our perspective, people are making decisions with not the full picture of information, and helping them to translate that into a dollar for dollar comparison can start showing how much better credit union cards actually are for half the population.
Just saying that out loud, I mean, I'm just thinking anything, not even a NerdWallet where you're actually actively looking for that kind of information. I'm thinking of all the TV commercials. All you hear about is the number of points you're going to earn, or the amount of money that you're going to double your cash back the first year, or something like that. I love that analogy. I thought it was great just for people who weren't there. The old, I don't know how many years back you have to go for albums and CDs and whatnot.
90s.
The old Columbia Record Club, and you get 12 CDs for a penny, and then all of a sudden they start showing up every month, and you got to pay list price, which it's kind of like a hotel room. Nobody pays list price for those things.
Exactly.
I thought that was a great way of kind of laying it out, and it's the sugar high. I mean, yeah, because you get really excited when you see that that first bundle.
Exactly.
So how does the process work? I mean, you're obviously setting this up as a syndicated process. I mean, you're actually taking the lead and actually driving the traffic to the website. So CardFit is primarily a marketing site, I guess, for cards. It's a card comparison site, but with a different algorithm.
It's a card comparison site with a different algorithm. So it's different than a major card comparison site in a couple different ways. One, we're willing to work with credit union partners that may have specific geographical footprints and reaches. And so our goal is to allow anyone in the US to come to CardFit and find a local credit union card partner that may be a better option for them. And so working with partners that just want to focus in certain areas. And so when you come to CardFit, the first thing we do is ask you where you're located, so we know what partner offers to include. Two, we default the comparison to typical cardholder behavior per the CFPB, but that's all customizable. And we've elevated payment behavior to the top variable. Do you pay the minimum? Do you sometimes carry a balance, or do you always pay in full? Because mathematically, that's actually the most important factor when selecting a card. As you mentioned, and as we say, the math wins. And so if you are a transactor, i.e. someone that pays off their credit card statement balance in full absolutely every month, then by all means, you should be optimizing rewards. But what we're seeing is too many people are trying to optimize what ultimately ends up being between like a 1 to at most 5% benefit on their spend around rewards, missing the fact that there's a swing between 11 and 31% on the APR, i.e. cost side of the perspective.
You mentioned before, for the typical revolver, the amount that they earn in rewards value versus the amount that they're spending on interest is, like you said, really lopsided.
It's an amazing stat. I'm hesitant to call it my favorite stat because it is just so gosh darn depressing. But every year, revolving cardholders, those that sometimes carry a balance, earn about $11 billion in rewards and get charged almost $122 billion in interest and fees on their credit card. That's every year. Yeah. Taken to a per user basis, because that number is so big, it's almost hard to grasp what it is. Per year, per user, that's about $42 in rewards earned. Great. But in the meantime, they're getting charged $456 in interest and fees. Anybody who sees those numbers broken out makes a different decision and realizes that they're not on the card that's best for them.
And again, we're not going to, obviously the credit union's not charging zero interest, so you're not getting rid of all of that interest, but the increment is obviously more than what you're earning in the reward. So it's a sucker bet, for lack of a better way of putting it.
Exactly. Federally regulated credit unions are capped at 18% APR. Most big banks are running mid to high 20%, some are over 30%. And so it's by no means saying that the credit unions are going to let you borrow unsecured debt for free. But if you are half the country that sometimes carries a balance, being on a lower rate credit union card is just going to be financially better off for you. It's still profitable for the credit unions, and the value that we're seeing for credit unions isn't necessarily in growing their card portfolio. That's not a top priority for most credit unions, but it's being able to use their credit cards to acquire new members. That is the thing that's really appealing for them.
Couple things that came up during the Q&A at the end of the session I want to share, one of which was mine, to be perfectly honest. But the other one first was, how do you then deal with, and I guess the answer is put the information, let the consumer decide. But if you are representing, or you have, credit unions, that both qualify, the footprint or whatever, that have offers for the same person, how do you differentiate who gets the lead? It's really just a matter of who sees it and likes the respective offer.
So most of the traffic we drive to CardFit, consumer traffic we drive to CardFit today, is through paid digital ads. And any dollars credit unions are going to put into CardFit for their paid digital advertisements, promoting, CardFit in their areas, will always go to their card comparison page, which shows how their credit cards compare to the popular big bank cards. So from the paid digital perspective, having two credit unions that work with us in the same territory isn't an issue. It does come into play on the organic, i.e. free traffic side. Someone happens to be sitting right outside Atlanta or in Ann Arbor, Michigan, to call both of us out, and goes to CardFit and punches in their zip code, or we pull their location through the browser and we see, hey, we have two partners in that area that could work with them. In that scenario, we show the user in a randomized order what credit union partners we're working with. We show them if and how many branches that credit union has in their zip code, because we see that matters for users. And then we give the credit union 140 characters to write a little blurb about themselves. So the user can pick one credit union, see how their cards compare, and then pick another credit union, see how their cards compare. Only working with credit unions as we do, one piece of feedback that we heard loud and clear is that even though credit unions know, technically they're really all competing with the major big banks, they weren't huge fans of having their cards up against other local credit union cards. And so each credit union gets their own instance of CardFit, seeing how their cards compare to the big banks.
Got it. Okay. Now, this is, kind of a interesting conversation that you and I got into. I used the phrase when I asked the question, the complexity of the message. I said, is this a little bit of an eat your vegetables thing? It's like, do people know that they've got this issue? But boy, that it just the sugar rush is so high of having the immediate rewards. You came back with I thought, an interesting analogy when we went back and forth on this, over the course of the last few days, about basically like a nutritional label. If you don't know what you're buying in cereal, how I'm just thinking about the messaging. You've got somebody. There's only so much you can do with banner ads and whatnot. So we've got to get people aware of this issue, and then give them the right criteria so they can make an informed decision. How do you kind of manage to cover all that?
Sure. And to start, I think your vegetable analogy was an interesting one because I thought a lot about it over the past few days.
And I appreciate that.
I don't,
said, hey,
and I do too. I don't think it's entirely apt because in my mind, as I think about that analogy, it implies that the user knows that there's a different thing that they should be doing that should be healthier, but they don't want to because they don't have the willpower because it's not as good of an experience.
And that's fair.
The analogy that I think is more apt is perhaps you're standing in the cereal aisle trying to pick a cereal because people are selecting a credit card and they're going to select and pick a credit card one way or another. I think the issue from my perspective is more of they're not even necessarily like the credit union cereal, to run with this analogy, isn't even on the shelf. It's not even there for them to know that it's an option, number one. And then number two, if it is there, they're not understanding the nutrition labels. The human mind didn't evolve to easily understand APRs or how that translates into dollars. And so telling someone that they have an 18% APR or a 28% APR, in our research, that really doesn't translate or give them the information that they need to know to be able to make a decision. The same way that you can look at cereals that position themselves as being healthy cereals, but it's when you actually read the nutrition label that you realize, hey, this thing's full of sugar and other junk. That's maybe, that famous part of this complete balanced breakfast.
Yeah,
but exactly. It's every other piece of food on that table that's actually making it a balanced breakfast, not the cereal. And so I think what we're trying to do is make that a simple dollar for dollar comparison, translate that APR into dollars, translate the rewards into dollars. And what we've seen so far is that when you lay it out in that scenario where it's just, hey, this is what this card's going to cost you or bring to you in value based on annual fees, rewards earned, and interest costs, people then end up making a far different decision than they are today when they're not seeing that information laid out in that way.
Good point. I mean, I think that, to me, there's still that challenge, and maybe it's a matter of a broader credit union wide, awareness campaign that, hey, are you aware? It doesn't have, because again, like you say, strike while the iron's hot. You can't get all of this complex information to people really quick in a banner ad. But if we can get people comfortable with the idea that, hey, you got an issue here, folks. And then if they're at least a little bit more educated in knowing what to look for when they get to the cereal aisle, then you've got it.
Yeah, I mean, my cereal analogy still doesn't get me out of the prize in the box, right? The 75,000 donut miles still may be something that someone wants the way that the prize in the box is cereal that someone wants. And I brought this up as we did that quick extra final round pitch. Look, I know that many credit union executives have been in the industry for far over 20 years and have much more experience than me. And so I say this knowing full well that I've only been in this industry for a handful of years and I may not be right. I've seen credit unions run statewide, national-wide awareness campaigns. But from my perspective, those awareness campaigns aren't tied to products that drive an ROI. And so when budgets get tight like they did in 2023, those are often the first things that get on the chopping block to cut out. And so what we're aiming to do and hopeful with CardFit is that it is a bit of an awareness campaign, but it's tied to products and an ROI that actually drives business value for the credit unions so that hopefully it can have a longer lasting stay. And the goal is to have CardFit be ultimately a commonly referred to known product and offer the same way that NerdWallet is, so that credit unions can start to compete with these major banks, at least in the area of credit cards. That's the vision that I have.
You're already in market, right? How many credit unions you have then? I know you're already doing marketing spend to try to get the visibility for the website.
Yeah, we're spending over $15,000 a month on paid digital ads in Southern California, in Washington State, in Michigan, in North Carolina. We have a number of additional credit unions that we're going to be launching pilots with. We're offering free, i.e. we're not charging a platform fee, pilots for any credit unions that commit through the end of the year, because we want to make it literally the goal of anyone in the US, regardless of where they are, can come to find CardFit and find a local credit union partner. And so we're offering non-committal 3 to 6 month pilots where we're waiving the platform fee, just doing a pass through on paid digital ads, in part because, look, we haven't been around for more than 6 months with this new product either. We want to find out, how is it working in Oklahoma? How is it working in Montana? How is it working in Texas? So that we can enter into longer term business relationships that are going to be a win for us and a win for the credit unions for driving new member acquisition.
And if those credit unions want to find out more, what's the best way to do it?
Joseph at nichols.us, JOSEPH at nichols.us, or our website is nichols.us. That is the website and the information for credit unions that are interested. The consumer-facing CardFit is cardfit.us, and that's where that's the product that we're powering. Talk about burying the leads. The one thing I completely failed to bring up is that we have an eligibility check on our end. So we can, with a first name, last name, and phone number, allow the user to initiate a soft credit pull so that we can match that up against the thresholds that the credit union has given us, so that we make sure we're passing through the leads that the credit unions are actually interested in being able to say yes to, not that we're just sending them a bunch of leads that they're just going to reject. Not a good user experience, not a good use of their time. And that's an important thing that I should have mentioned earlier, because it's not just about driving traffic, but it's actually about driving the traffic from within their community with people that they have a good ability to then actually help and do business with.
Joe Grassi, the founder, CEO of CardFit and Nichols. I guess, well, Nichols and the product CardFit. Love the conversation. Really appreciate you taking the time, and congratulations again on the win.
Thanks for the opportunity, Glenn.
I want to give a lot of credit to Joe on this one too, because I asked a question as I'm inclined to do during these things, during the audience question section. I asked him very specifically, is this kind of an eat your vegetables type message? You know, people want to get the gratification and the sugar high, as I said, of, you know, the rewards, the upfront bonus and things like that. And I thought he had a really good answer. And then he came back to me a couple days later by email and said, you know, I've really been thinking about that. And I think that the comparison is much more a nutritional label and an informed consumer. And he sent me that before we actually had this conversation, as you can probably tell. But I love the way he actually gave that additional attention to it. And I think it's a great point. I think he's got a great point. I do think that there is a messaging challenge here, and it's a very worthwhile challenge to go after. But it'll be interesting to see how this does. I think it's a great idea, and I can't wait to see how it does. These next two, it was somewhat surprising to me, given the environment out there right now, that when we got to the three finalists that were competing from the three different brackets at Venture Tech, all again by audience vote, there were no AI companies that made it through to the final stage. And that may have been in part, you can argue, because I think these two really stood out. They were also against each other. You know, they were pitted against each other in the same bracket. So they kind of split the AI vote, you could argue. Now, having said that, if I even added their votes together, they would have basically barely missed out, again, to another company called Allure Security that wound up winning that bracket, that dealt with website intrusions and things along those lines. But I thought that both of these companies here, Aviary AI and Ceres AI, took novel approaches to the AI. You know, there's a lot of AI companies out there these days looking in the space, but I thought they both had a really interesting approach of going about it. So for the first angle of those two, let's listen to my conversation with Blesson Abraham from Aviary AI. Here with Blesson Abraham, the co-founder and CEO of Aviary AI, one of the companies that made a great impression yesterday at Venture Tech. Thanks so much for taking the time. Really steep competition this time. It is a great stable of companies.
It is. I mean, I think the competition's definitely stepped up. You know, Glenn, first off, thanks for having me here. But, I was here for the very second version of Venture Tech way back in the day.
Really?
Yeah.
With Aviary?
We actually started off as a consumer-based app.
Oh,
and so this is the pivot over to becoming a B2B. And so it's interesting to see going from a small conference room at Alchemy's headquarters.
60, 70 people.
Right.
Exactly.
To this now, it's cool to be back in here. And like you said, the competition is definitely great.
So one of the things, I mean, kind of the catchphrase that I heard that I thought really kind of summarized what you're doing is an AI solution. Aviary AI is a solution specifically built for a highly regulated industry, which I think is important because that's really takes a different angle to how you approach using artificial intelligence.
Yeah, absolutely. We're not trying to be all things for everybody. We're specifically addressing a market that we know is highly regulated, but has a high opportunity to bridge gaps in regards to how you communicate out to members. So our solution, our generative AI model, our large language model is built specifically for credit unions, banks, and insurance companies. So that's
I remember also you mentioned that you are not based on any baseline model from OpenAI, Anthropic, Google.
Right.
You've approached this yourselves.
We've been purposeful about this because, again, we're in that highly regulated industry. So we're not using OpenAI, we're not using Anthropic, we're not using Google Gemini as our baseline model. What we've done is actually created what's called a mixture of experts model. So essentially you're taking together multiple models that are open source, putting the best parts of them together, then adding in additional fine-tuned data to make that model applicable for the industry that you're actually servicing. But then now we can defend out to regulators what's actually happening in that entire process of where the data is going in, what's actually being done. We can show them exactly.
Full transparency. And I thought there's an interesting little twist to that one I want to come back to, but also I think many of our listeners are probably familiar with you, but you had a prior company and also you go back to BCU, correct?
Yeah. So I started my career at Baxter Credit Union, was in their leadership development program, went on to eventually lead business development. And then I went and started a company called Savvy Intel. We were a data and analytics SaaS provider to credit unions. Mm-hmm. And that eventually got acquired by TrueStage in 2017. I was around with TrueStage for about a year and then left and started Cambio, which is now pivoted over to becoming Aviary.
So you mentioned about the training part. This is one of the things that I can't resist talking about. You mentioned yesterday during your presentation, one of the sources for training your models was the Kelsey Brothers podcast, which I love.
Yeah. So what's funny about that is large language models, for folks that don't know it, is are primarily based on text literature, right? So it's not really great at conversations. That's why I can write an email for you, but sometimes it's long-winded. Some of those conversations kind of come into play. So how do you get it to become conversational? So one of our ideas was get podcast data and train it. And so what we did, our first pathway is getting the Kelsey Brother podcast. And what was the best part of it was, all of a sudden now our model started to become curt and it started swearing a bit more. And so we obviously didn't use it for any productionalized pieces, but we had a lot of fun with it internally and then realized what we needed to do to make it become more conversational.
Being crassly commercial, maybe I'll get a picture of the Kelsey Brothers and use it for the image to this podcast. The other thing, though, when we really be serious about the way you're really dealing with the regulatory aspect of this, and I'm not sure I fully understand this. Maybe you can get into it more. You mentioned that basically you've got 3 bots tracking, monitoring every call for a variety of purposes to make sure it's staying on track. Can you kind of describe that a bit more?
Yeah, think about it like this. If you had a human being on these calls, traditionally what you would have is a manager. Mm-hmm. You would have somebody maybe there to observe what's actually happening, whether or not there's coaching quality. So how do you now build that into something that's more automated on the large language side of the world? You do that by having independent other large language models. So what we've done is you've got the voice bot that runs on an independent large language model. You have a second one that's sitting there monitoring for escalations, interruptions, language changes, kind of being like hey, you need to stop talking. And then the third one is really based on being a coach. So since it's independently trained, think of it almost like an individual human being, just watching, grading, auditing, seeing what could have been improved.
You use the example on stage, kind of like when you've got a trainer walking along with somebody at a restaurant.
Right. So it's just, it's there by your side. So we did that for a couple of reasons. One being audit, quality control. Because, when you're making hundreds of thousands of calls, you can't monitor every call as a human being. So how do you build that in? You use the large language model to do that. The second reason being, again, we want to be able to defend back to regulators if they ever ask and say, hey, well, how do you guys verify and make sure that these calls are going the way that it should? Or if there's something that goes off the rail, how are you doing this? Well, by independently training another model that has nothing to do with the original model, you're having an independent verification source actually come in and do that. Yeah. So that's the reason why we did it. Again, we wanted to be, it would have been easy for us to say, hey, let's just get this out there. And we did. We moved quickly on it. But we also wanted to be thoughtful about making sure that when it came to compliance, when it came to regulations, we were going to be situated in a good spot for our credit union partners.
And that question always comes up. You can't have the black box. Well, why'd you come up with that answer? But the model told us to. Right. Yep. You got that one covered. And you're in production. I know you've got a couple of solid investors. I saw on the logos. You're in production. How broadly now?
Yeah, so we've got over 14 clients right now. Okay. We've got another 5 or so contracts that I'm hoping will come through here in the next month or so. So we've been live with about 14 clients now. We've made over I looked at the numbers last night. Actually, we now are over 320,000 calls that we made over a 6-month period.
Wow.
So these aren't based on small sample sizes. And, one of the things that I would tell your audience is I know the skepticism of thinking about outbound calls being made to members. While I won't pick up the calls, the data has proved out members do pick up the calls.
Interesting.
The data has shown that 40% of folks pick up phone calls that are made to them. We have a 70% interaction rate where members are interacting with the agent, not hanging up on, the intro, having an actual dialogue with our agents. And then we have a 30% success rate with our various use cases. So the various use cases that we go out with is think about new member welcome calls that you're not able to do, indirect member welcome calls, doing credit card, debit card activation calls, making sure that they're set up, understanding what their benefits are for the card so that they actually put you as top of wallet, dormancy reactivation campaigns, doing even surveying are all different campaigns that you can now do through a generative AI voice agent that can actually represent your organization at scale.
So if people want to find out more, best way, Aviary AI?
Yeah, so our website is helloaviary.ai. Come check that out. Otherwise, you can always contact me at babraham@helloaviary.ai.
Listen, Abraham, co-founder and CEO of Aviary AI. Thanks so much.
Appreciate it.
So I was really happy I was able to tell my daughter that there was a Travis Kelce reference in this week's this week's podcast, and then which I certainly didn't see coming. And talk about a good hook. And then even less expected was and this did not come up on stage. It did come up on stage now that I think about it. But the other AI company, continuing the football theme, Joe Montana. Wouldn't have expected that one either. So hopefully I've whetted your appetite for that one. And again, the piece that I particularly like about this solution with Ceres AI is so much of the AI focus has been on interacting with the consumer. And I've still got, I think that Blesson and Aviary is doing a really interesting approach to that, especially making it very specific and not just training it on the broader web. But I think that there's so much that can be done in kind of the less sexy area behind the scenes on the back office. And that's what Daniel Jamil's looking at Ceres AI. So let's hear what they've got going on. I'm here with Daniel Jamil, the founder and CEO of Ceres AI, which was one of the companies that really stood out to me in the presentations at Venture Tech this past week. Daniel, it's a Saturday afternoon. I really appreciate you taking the time to join.
Yeah, happy to be here. And as I mentioned, I'm on founder schedule. So every day of the week is good.
It kind of all blurs together, doesn't it?
Pretty much.
One of the things that really kind of caught my attention around Ceres is that it's got AI in the name, so obviously people can understand where you're coming from, but you're more focused on the back office as opposed to, I think you even specifically said, you're not a chatbot, you're not robotic process automation. Can you talk a bit more about your mission and the pain point you intend to solve?
Yeah, sure. So at Ceres AI, what we're doing is we're building these advanced AI workflow agents, primarily focused on the back office. And really our goal and our mission is automating, augmenting these mundane, complex, redundant tasks. So, it was funny, I was talking to president at a credit union just a couple of days ago over dinner. And, I mentioned to him, your offices look very pretty. The front end experience is amazing. But the back office it's like it needs a janitor to clean it up. Like it's a messy place. And he admits that, he was laughing. He's like, it's so true because there's just so many legacy things. And often it's not fun for the human team members either, right? It's really mundane, complex processes and workflows. So we're coming in and we want to do the heavy lifting with AI agents to take care of that task, leaving team members who focus on the high impact issues. Focus on the member experience, focus on things that matter. And to give you an idea, that's sort of our belief is this is the future of work where humans and AIs, work together, where the humans are doing the high impact and the strategic decision-making, and the AI is doing the heavy lifting and the monotonous stuff. I mean, they're very good at it. And, humans don't often enjoy these tasks. So that's sort of where we come.
And I think I had the phrase written down from your notes. Your agents are always under human supervision. You're not looking to just put these things out to the wild. In fact, am I correct in thinking, do your apps ever interact directly with the member base, or are they always working with the employee base?
I would say they are indirect. So think of us as a virtual assistant. So every team member in a credit union has a virtual assistant where they can assign specific tasks to do. And we don't directly interface with members, but we will generate the response. So for example, let's say if a member sends in a application for an insurance or a mortgage, there's all these steps that a human agent has to do, from that first email coming, that application. So I will take care of all of those back-end tasks, and we'll do the write-up, we'll do the verification, the validation of the forms and so forth, leaving the team members to focus on just reviewing it and then communicating with the members. So we're more sort of indirect. Yeah.
It makes me think of the way I think of it often is, we're to the point with AI that it kind of functions at the level of a pretty solid intern or maybe a junior analyst.
Yeah.
And you don't let that stuff out without taking a closer look at it as well. So it's kind of a similar kind of workflow.
Yeah, that's actually, I'm glad you used that term, intern, but the term that was used by other credit union folks that we work with is associate. So almost like you have an associate and an analyst on the team that's doing a lot of that heavy lift, for your team members. Yeah.
I think you kind of addressed this already, but I also noticed that you made a comment that agentic systems, which I guess is a form of the word agent, that agentic systems are kind of the next big thing after large language models. Can you say a little bit more about what you mean by that?
Yeah, absolutely. And I think it's worth setting the context. So past, I would say, couple of years. It's transformer networks have been around for 5 years, but really the past couple of years where GPT has come up, GPT-3 and so forth, we've sort of have a system that can reason, right? So that was sort of like the first step. You've sort of built this brain that can do what we call single turn sort of problems, meaning you can ask a question, it can respond. You can provide GPT or LLMs with certain amount of data. It can give you insights. So, very straightforward back and forth interactions are possible. But now that you've built sort of the brain, the next layer, and you're going to hear this term agentic systems more and more over the coming months and the years. Now the next part, okay, we built the brain, but how about building the next layer of stuff? Can they actually do more complex tasks rather than just answering a question? Can they actually perform the job that humans are not focused on or really good at or don't enjoy doing? Can they actually perform those more complex tasks? And the answer is yes. So it's sort of like we're at the stage where we have, as you said, an intelligent system that can reason, that can make decisions, but it still requires human supervision. And based on that criteria, it can do a whole range of these complex sort of workflows and tasks.
That's really a helpful way of thinking about it. So when I hear about people looking for sentience, I mean, we're not talking about that, but we're talking about a step in that direction of just getting able to do something a bit more complex.
Yeah, absolutely. And I mean, without getting into the philosophy of AGIs and general intelligence, I would say the goalpost keeps changing. We always keep expanding what it means to be intelligent.
Yeah.
But for example, the previous versions of the Turing test, LLMs are pretty capable of passing, a bunch of those now. So we've sort of moved the goalposts, but it's fascinating because by building a synthetic intelligence as humans, we're learning what it means. When we say things like, how do you define intelligence and consciousness? We don't know. There's no really correct answer. And so we're learning by creating something that's more synthetic. And so it's a fascinating place to be.
It is. Well, I love this conversation. That's really interesting. Yeah, this is your second startup, I think you mentioned, right? And the other
yes.
one, not in financial services, but also in a heavily regulated industry.
Yeah, that's correct. And that was also where, an area where we build machine learning prediction models. So as a team, we have over a decade worth of experience building, world-class enterprise software under compliance, but also my co-founder was an author, and she's my co-founder in this company as well.
Same team.
Where we published. Yeah. And we published a paper on our machine learning prediction models in Nature, which is the most prestigious science journal. So one thing that kind of sets us unique is we're not just a company and a team building tools. We've got folks who are doing, cutting edge research, and we're actually publishing it, which allows us to do some unique things that, the standard sort of market is not there yet. So, yeah.
I can't resist asking because it's just so interesting. Joe Montana, the quarterback, has been an investor in both of your companies. How did that come about?
So it's a really fun story. So back in 2016, when I was working on my last company, basically I was part of this sort of incubator investor program called Y Combinator. Mm-hmm. And in 2016, Sam Altman was the CEO of YC. So it's sort of like a small world, but
wow.
and so we had a dinner where we had I believe it was either Ed Catmull from Disney or was it Jack Dorsey from Twitter? I can't remember. So we were having a dinner, YC, and then Joe Montana was there. And to be honest, I'm being a Canadian, and I never really grew up watching football, so I didn't know who Joe Montana
So you
was.
weren't wild like
So
the other people at the
yeah, I
table.
had no idea. So it's a fun story because you know he comes up to me after the dinner and he's like, "Hey, Daniel, we love the impact and just the your story, the company and everything you're building. I would love to invest in you. My team would love to invest in you." And I was like, "Okay, there's this tall, good-looking gentleman who's super nice, right? Like, okay." And I was like, "Oh yeah, I'm just taking him through the rigor of like, okay, tell me more about your company and who have you invested in and so on." And towards the end of the conversation, I noticed there's a group of guys who are just other founders who are just watching us talk. And he's like, "Daniel, Joe left by saying, Daniel, okay, please give us a chance. Let me give you a call tomorrow and let's talk more." Right. So he leaves. And then the three guys come in. He's like, "Hey, so what did Joe tell you?" And I was like, "Oh, you guys know Joe." And they were like, "Wait, you don't know who Joe Montana is?" I was like, "Should I know who Joe Montana is?" And then one of the guys was like, "Wait, he's Canadian. Let me break it down to him. He's the Wayne Gretzky of football." I was like, "Whoa, okay, now I got it." But the story doesn't end here.
Oh,
So
wow.
next day, Joe calls me, and then I tell Joe on the phone, it's like, "Hey, Joe, full disclaimer, I had no idea who you were. For me, football, because I did British schooling when I was young. So football is what you kick with your feet, not what you throw with your hand." And he just burst out laughing. And so that's kind of like how we connected. And that's our story.
That
Yeah.
is awesome. I mean, and I'm guessing it worked to your benefit. You weren't like doing the awestruck
I,
kind of person. You could actually have a business conversation. That's great.
yeah, yeah, certainly that was the case, but it was completely unintentional. I just had no idea. Yeah.
So you're fairly far along. You've got clients live, both credit unions and banks, right?
Yeah. Yeah. That's correct.
How many? Just kind of in broad brush terms, just give people a sense of. You've got a few.
Yeah, I would say. Yeah, I would say we're still under 25, but the range is pretty big. So we would have folks in the billion. Half a billion is the lowest that usually we focus on. To there's a case we're working with a large bank that's over 1 trillion AUM. So
Wow.
it really ranges across the size. But one thing that kind of really stood out was that the complexity is the same, right? So whether you are a large bank, it's just that the bigger players can throw more money at it, right? Because they have more legacy
Yeah.
problems. But it's not that different that we see, on the credit union side. But one thing that has changed, and I think it's worth for your audience to sort of understand is, and these things are coming up in conferences as well, which is, the larger folks are putting in billions of dollars in inference and compute and building their AI models, right? So the question really comes in, and this was brought up by a CEO of a credit union where she basically raised her hand and said, "Well, how do we compete with this? We don't have a $300 million a year budget and things like that. We don't have hundreds of millions of dollars." So that productivity curve between, sort of like the larger players and the rest of the industry is growing. And this is sort of where we come in and raise our hand. It's like, hey, that's where we can help, right? We know what some of the bigger players are doing because we're actually seeing and helping solve their problems, and we're bringing many of that technology to the rest of the industry, where it's all about using these sort of AI agents, and it's not a zero-sum game versus human versus AI. It's about human and AI working together and really unlocking that 10x productivity curve. And in terms of data, I already shared that as a presentation, but on average, we're helping departments save like 35% a year in costs, and at the same time increase 2.3x in output, right? And for the smaller credit union, that means close to $535,000 a year in saving. And for the more larger ones, that can be higher than 2 million. And really, the question we ask is, if he were to provide you another $1 million a year, on the table, how would you improve that member experience, right? Like that's what it's really about. So
Yeah.
so we're excited, and we're delivering that impact as well. So we're very happy about that.
And what I'm hearing is that it's not a scale issue, that you're able to work with smaller institutions, like you say, down to maybe half a billion or something like that. There's
Yeah,
still
yeah.
a price point
Yeah.
that doesn't rule them out.
No, and I think that's part of our just philosophy, is that we want to help the industry as a whole. And what I really personally, I'm passionate about credit unions is that because folks care about their members in the community, and that's something it has to be part of that culture, and it's very authentic. You cannot engineer that, right? And so meeting credit unions all across, like that's sort of what got us really excited. So it's not just me and my co-founders too. So we're passionate about this space and we want to improve that member experience.
So if people want to find out more, and I want to find out more, so I'm guessing there's other people out there that do as well. Saris.ai, is that the website?
Yeah, it's saris.ai, not .com. So Saris, SARIS.ai. And we've got a waitlist or a request form, so you can just fill it out. And our whole goal here is we're not trying to sell you a software. This is what I tell every credit union. The idea really here is that, let us see if you can come in and help. So we do what we call a workflow analysis before. We'll show you the ROI that the system can present. We're very confident on our numbers. And if it's not at least 100% improvement or 2x improvement, we won't move forward, right? Like that's how confident we are in our technology. So
great. Daniel Jamil, founder and CEO, Saris AI. Thanks so much, especially on a Saturday, even though it is Founders Time. Thanks for taking the time.
Thanks again, Glenn. It was a pleasure.
So as I said, two more really interesting companies, both taking a different approach to AI and basically addressing different pain points within the organization. Aviary and Saris, I think, are both really interesting plays that I want to see how they proceed as time goes on. And obviously very interested in Joe Gracia Nichols, winner of the overall prize at VentureTech, and we'll be watching them as well. With that, I know this is a long episode because we had 3 interviews for a change, and they were so darn good that I just really couldn't even figure a way to cut them much. So if you're still with us this late in the game, I appreciate your attention, and I hope you got as much out of it as I did from talking to these founders, which I thought were fascinating. As I said, we'll be back. We've got, I think we've got 2 more episodes before the end of the year. Don't mean to be counting those down, but another company, newly launched QSO. I won't say any more. I'll maybe build a little bit of suspense for next week's episode with an interesting play in the instant payment space. As I said before, you can always find out more about the Best Innovation Group by contacting us via our website, big-fintech.com. You'll find us on Blue Sky as well. You'll find us on LinkedIn. Big Fintech, Best Innovation Group. JB Fintech and John Best is also the handle for our Grand Poobah. You'll find me on LinkedIn as well, Glenn Sarvati, and my firm, 154 Advisors. Always love to hear from you. Always hope that you like us or whatever you do with your podcast. If you're not picking us up directly at the Best Innovation Group website, where on the media tab you will find lots and lots of past episodes, I'll post the link to the one from our prior VentureTech interviews as well as part of our show notes, as well as the links to all the companies we spoke to today. But you can always find us as well on Amazon, Apple Music, Spotify, etc. And hopefully you'll find some more good stuff that you enjoy out there in our past archives. We'll be back next week with more content, new content pretty much every Tuesday here on The Big Cast. Thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.